Welcome back, everyone, to another jobs report day. Interesting, some technical issue here. Let's try to get that solved. But anyway, welcome back. We've got jobs data coming out in just a moment. Yeah, it looks like X won't load for some reason. How bizarre. An error occurred. Okay, fine then. Goodbye, X. Anyway, so we'll be getting that jobs data in about 30 seconds here, and we'll see what happens. We've got some big expectations out there. A lot of folks think it's going to be around 190. That's the Wall Street consensus. Some think it'll be hot at 200. Some think it'll come in low, and we'll start seeing some softening. So let's take a peek at what happens here. So we get 206. 206. No weakening there yet. However, the unemployment rate does move up to 4.1, with average hourly earnings matching that 0.3 we were looking for. 3.9 on the year-over-year is also a match. So unemployment rate ticking up a smidge again, but despite that sort of smidge of an uptick there, you've got this... you've actually had more jobs created than expected at 206. So participation rate is stable. But again, 206 jobs versus the 190 survey. And the survey was that the unemployment rate would be at 4%, and it comes in 0.1 higher. So a little interesting there. If I look at markets seem to be cheering this, although markets seem to be cheering just about everything right now, with the Qs now up about 33 basis points. Tesla at 2.5, and BTC can't really figure out what it wants to do regarding that. Let's listen in for a moment.
As expectations, and just to put a face on it, last month was up 0.4, as I said. The month before that, of course, April, was only up 0.2. So you can see we're kind of running right in between. And if we look at the year-over-year perspective on hourly earnings, 3.9%. That dips below the 4.1% in the rearview mirror. And let's look at the way back machine. 3.9 equals April of 21. To find a lower number than that, you have to go back to May of 21 when it was 2.3%. Now, let's consider average hourly work week, 34.3. That's exactly as expected, exactly as...
Yeah. Finally, it looks like the market's actually reacting to this, by the way. You're getting a little bit of red in some of the more interest rate sensitives, it looks like, and the Qs are trying to form a red candle, but honestly, they can't. Partly because NVIDIA doesn't care. It's going up after this.
Right, that's what they were expecting. It is 1/10 better than our last look at 62.5. 62.6 is the best level going back to just April when it was 62.7. If you recall, last month, of course, was the dip to 62.5, and that was the lowest level going all the way back to January of 23. And finally, U6. Okay, U3 is the unemployment rate that moved up to 4.1. U6 is the underemployment rate, and that remains at 7.4%. 7.4% is the hottest or the highest since Nova of 21. The response in the marketplace has been twofold. Initially, it popped up. Now it is lower. So 10-year notes were 432 prior to the number, Joe. They're now at 428. 428, and that means we are now down a dozen basis points on the week for a 10-year note, and at 463 for a 2, which was at 467, you're looking at down 13 basis points on the week. So rather dramatic drops, especially considering the long end was pushing 4.5% prior to the holiday. Let's throw it back to the panel for some comments.
Well, Steve's been here, and you know that while you're doing that...
we just got revisions, by the way. Those are actually really big revisions down. Prior non-farm payrolls was 272, that went down to 218. And the change in private payrolls was 229, that went down to 193. So what you actually had there was a minus, what is that, 272 minus 218. You had a revision, of, oh goodness gracious. There we go. 54,000. So even though you just beat a little here by 16,000, that revision's pretty big. Let's listen in again, and then I'm going to get the households reports too.
And then temporary help, which is a potential leading sign, minus 48,000. So you have this kind of dual sector economy. By the way, it's not the federal government. A lot of it is local government jobs. They seem to be still hiring in those places or those municipalities. Yep. And it's the hospitals up 22,000. So that's where a lot of the job growth is coming from. I think the other data that Rick was talking about, the increase in the participation rate, along with the idea that wages of the year over year went down again to where it was in the prior month or 2 months ago, plus the revisions. Again, this idea of gathering weakness but not being weak, I think is the
Yeah, that's a good way to put it. Gathering weakness but not being weak. The household survey came in at a positive 116,000. So it did come in positive, whereas in the prior month, you had a decline of somewhere around 408,000. So yeah, definitely not clearly weak.
We look back at the last week of data. Also, you've got GDP now cast at just 1.5%. ISM employment and orders came in lower than expected. You've got slowing wage growth here year over year at 3.9%. Steady job gains, something we would have been happy about in 2019, but slowing. And I think the May PCE reading all
weird. Nvidia just went red.
September cut. Things are steady, and we need to keep it that way.
Douglas Holtaken, earlier I mentioned it's a pretty good position to be for the Fed to be able to refocus on employment with inflation coming down when we're talking about refocusing on employment from very low levels of unemployment. It's pretty good. It's pretty good, isn't it?
Well, I think the Fed is now back to being a dual mandate Fed. I mean, they had the luxury for a couple of years of focusing exclusively on inflation. Now they've got to weigh these trade-offs. How much of the real weakness that we're seeing in the household sector is going to spill over into the labor market over the next couple of months? I think that's a real tough call. But, you know, the Fed doesn't like to move in election years. I think in this election year, they're especially loath to move. They've set up expectations for a single preemptive cut. That looks like after the election. So now I think when do they cut? And if they have to cut because of a material deterioration in the economy, they can do that before the election, but they can't make a preemptive cut beforehand. So I expect them to stay on hold till after the election. And, you know, they still have some work to do. Inflation expectations are still at 3%. Inflation's been stubbornly between 2 and 3. So it's not like they've got a real mandate to be going lower just yet.
Well, I mean, there's a chance that that falling GDP estimate could be enough of a mandate to get people to start thinking about, oh, Fed, you better start coming in lower here. Somebody donated, Jeff donated $5. What's the reasonable explanation for downward revisions? Are they being, aside from them being intentional? Well, I mean, of course that's always possible, but if you had you asked for a reasonable explanation, it would be that this jobs data comes out, the first Friday of the month. You might not be done collecting your survey data for the month, quite frankly, until a couple weeks into the very next month. And so then what you do is you project forward what you think the responses are going to be, and so you can actually have your survey done with the adjustments or seasonal adjustments that you make. And then after you're done making those adjustments, you end up seeing what happens, and then when you actually get the data back from the survey over the next 2 weeks thereafter or whatever, then you make revisions. That's an example. It's not necessarily the only explanation or 100% accurate, but that would be one way to consider why there are revisions in the first place. It's just a very early survey. Nvidia is declining now. Tesla's losing some of its lead there, but it's still got about 2% on a gain, which is fantastic for pre-market, frankly. The Q's somewhat rotating down on that. Obviously, we've been watching Bitcoin kind of decline over here. It's a little unfortunate. But I got a pretty big support line over here at 52.4. We're almost there. I mean, we've created the McDonald's golden arches here. Kind of remarkable. So hopefully we don't sort of continue this leg down. But anyway, that's a bit of the decline you've got there. Still been short on sort of a macro hedge for either BTC or like a derivative exposure like coin. But anyway, so I mean that'll do well today, but we'll see what happens as it continues.
To try to take care of people's needs during a time when they needed extra assistance. Many are reticent in Washington and all the local municipalities to push that money back down to the pre-COVID levels where it was enhanced. And I think that's going to continue to haunt us on spending. So there's going to be a big push to look at where the money's going. And some programs are going to have to be cut. And I think that's the issue with both administrations, no matter who wins, that is going to be a tough job. It's never easy to cut back on programs. There's never sunsets on government spending, and that's the problem we're in.
What do you think, Steve?
I have long maintained that the solution to our deficit issue comes from both sides of the equation, which is
like
the spending side
goals,
and the tax side. I mean, we did cut taxes. We have some issues of our deficit related to our revenue side, and we have some related to the spending side. And I go down the middle on that one. And I think that it would. I don't think the public wants the government to solve
the numbers aren't close.
The benefit.
The numbers aren't close. They're 18% of revenue. That's what we average. We're 24% on spending. We've never averaged that.
22.
24, yeah. 23.9.
Okay. All right. I'll take your word
versus
for it.
18.
I'll take your word for it.
Right, Aiken?
Yeah, well.
All right, they're yapping over nonsense over here. Let's go over here. This is the employed person by class of worker and part-time status. And if we jump over here to part-time for economic reasons, let's see here. That would be a decline in part-time for economic reasons of, looks like 202,000. Let's see here. That's a decline. That's a decline. Okay, so part-time for economic reasons, 202. Part-time for non-economic reasons, well, that number also went down for the non-agricultural. So both of those went down a chunk here. How much is that? Excuse me. It's 202. And then it looks like, what do we got? 53 plus 285. I mean, that's like, what? We got 353 minus 15, so 438, 338,000. Okay, so a loss of about 540 in part-time from the non-agricultural. And part-time for economic reasons here, all industries. Yeah, all of these part-time look like they sort of declined here. May to June. That's really interesting. Yeah, persons that work part-time. I don't think I'm reading this wrong. That's negative. Negative. Well, could only find part-time work. That one's positive, but offset by a larger decline here. That's a decline. Yeah, both in agricultural and non-agricultural. We have a decline in part-time workers. Well, that's interesting. Okay. And I was just also looking at sort of the category of jobs, which you can see here. Manufacturing lost about 8,000. Construction up 27. Goods producing 19. Retail trade minus 8.5. Financial activities, temporary help, minus 48,000. Healthcare and social assistance, that's where the jobs are coming from. And government, 70,000 government. And healthcare and social assistance, 82.4. Wow, big numbers.
Programs have expired. We are seeing those expire, and I think that's why you're feeling some pain in some household levels. And so I think there's a solution of we need to spend better and we need to tax much better and much more at the top.
Okay, we're going to end it there. I think it was pretty good for 6. I think we didn't. You think 8, 7, 8 would have been better, Leisman?
I'd like to see the 10 box. It's been a while. I just visually, I think it'd be interesting.
If we put Paris Hilton and other
put some other people in it just randomly.
Yeah,
that's a good idea.
We had Carl.
There's 7. Can we put Jerry in there? Garcia? Is that possible?
We had Carl's dog, but Lucky's now. Along with Pongo up at the bridge.
Well, you know,
Rainbow Bridge.
Carl's dog, my analysis, it's a toss-up.
Or someone saying, that's hot.
That's
hot. Yeah, that was
Could
always
go either
good.
way. Everybody
Anyway.
have a great weekend. It's just about here.
Thanks, Elizabeth, Doug, Stephanie, Rick, and Stephen. Speaking of hot,
Speaking of hot.
Andrew,
Thanks.
you're hot.
Coming up, we're going to get into what the jobs report could mean for the Fed as central bankers gauge the economy and what they may or may not do with interest rates. The one that's gotten it right from the very beginning, former Fed Vice Chairman Roger Ferguson, is going to join us next. Don't go anywhere.
All right. Let's just see how things are reacting a little bit. I still can't, for some reason, get X live. I was trying to get that live for folks over there, but it just doesn't seem to want to load today. So I don't know what Elon has done. What has he done with the place? Oh well. Okay. So we've got Tesla here. Holding on to about 2%, which is pretty good. Nvidia wanted to give up a little bit after that jobs report. You saw some volatility here and somewhat trying to trend down, but I don't know that directional hold. Salesforce, it's almost impossible to tell what's going on over here. There you go. Trying to move up. Had a nice day over the last trading session. Mostly because you've really seen it break out of that 230s range and head on up to about 260. So pretty good for Salesforce there after their earnings really crushed them. Yep. Let's go grab coin. Let's see how they're doing. I think they're down like 4%. Yeah, 4.42 right now. You're under that 218 level. It's pretty common to go knock on that door. Pretty common level. Let's see here. Okay, Robinhood down 2.5 for some reason. Yeah, let's see what some larger movers are. Let's see here. Open door 278. Tesla obviously at 2. It's on its 21-day rally mode. SunPower 8% to the downside. That's got to be news-based. Let's see what's going on at SunPower. And let's jump in over there. SunPower class action complaint to SunPower. SunPower says subpoena relates to revenue recognition practices. Oh, there's also, oh, I see, okay. SEC issued a subpoena on accounting practices and revenue recognition. Well, that's not great. So that's SunPower for you. You've got some folks talking about costs. Oh, wow, 36% over here. Geez, that thing was up 143 in the last trading session. Oh, wow. Yeah, look at that. That's crazy. 143 for another, what's the market cap of this one? Market cap is $98 million. So pretty small. And no options. So straight shares for costs. Wow. Some real momentum going on over there, apparently. Be careful. But let's take a peek. Momentum. Oh, yeah, this is all halted for volatility after jumping 61%. Up 73%. Advances most in 21 months. And then declines 25%, most in 21 months. Wow. That's some real movement there. All right, anyway, Nvidia's given up a little bit going into the open here, it looks like. And the Qs are sitting at just about 18 basis points up. They were as much as 30 up. And of course, what's interesting is, BTC's given up so much, it's actually lost its mojo as sort of a macro leading indicator. Usually, I could trade off BTC because I see a move in BTC that's sudden to the up or the downside, and then you end up seeing some follow through in Nasdaq, technology related stocks. Not anymore. Now Bitcoin's going down and other stocks are just not moving at all. So Bitcoin's going down for its own reasons. Now people think that's selling pressure by the German government. Some people think it's selling pressure from the U.S. government. Some people think it has to do with Mt. Gox. The reality is probably all of those, but pretty small numbers relative to the market cap. So it's somewhat surprising you got a lot of lot of that pain, but it's probably what it is.
Finally, I also say that the labor force participation rate is also a sign of an economy that's sort of coming back into balance. So if I were looking at this number,
You hear that a lot, by the way, this sort of post-recession, oh, we're coming out of a recession thesis for why economic data is coming in a certain way.
and I would argue, frankly, September, while the market thinks it's the time to go, I think it's more 50-50. It's also possible to wait for a bit more data to be certain about the inflation continues slow. So we've seen signs of slowing, but from a high level. So from my standpoint, good number, not great number, not sure that it's the all clear that we must cut, that the Fed must cut in September.
What percentage
Die Bundesregierung? Yes, exactly.
rate cut? And of course, we should mention that rate cut would happen after the election.
Obviously, the Fed is very data dependent. So I think as we get further and further in the year, assuming things continue to unfold this way and inflation gets under control, we're going to see a rising likelihood of a cut this year. November might be on the table. Obviously, we would get a lot of political howling on both sides. Consequently, December might be more likely. But it really does depend, very importantly, on how things unfold. And I think we ought to be very clear the Fed is going to try to be as apolitical as possible. Look
Oh, Sam, thanks for joining the stocks group today. Appreciate
one
it.
of the next three meetings if that's how they interpret the data.
It still appears that both economists and the market seem to think that September is in the offing. I mean,
Well,
it also
this
seems that
September,
the
as
market's been ahead of itself pretty much the whole time on this.
Well, that's exactly the point I was about to make. Yes, the market, for lots of obvious reasons, would like to see a cut. Frankly, I would like to see a cut too, because that would say inflation is clearly, under control and moving towards that 2% target convincingly. But I would also argue that, as you just pointed out, the market's been a little optimistic about a cut, and I would say this data 50-50. Not to say zero chance, but I think the market again might be a little optimistic because I don't see anything here that says the economy is really weak. I see an economy that is either weakening or getting back into better balance more sustainably.
So here's
Now, gosh, the guy reminds me of Gus from Breaking Bad. I can't stop thinking about it. Anyway, everybody have fun with fireworks yesterday? Or watching fireworks? Hopefully nobody got injured. We had someone behind our neighborhood, well, actually our in-laws' parent neighborhood, where we were watching people set off fireworks, caught some bushes and a tree on fire, so we had a lot of entertainment. I tried putting it out too, but nobody had a long enough hose, so it was buckets until the fire department came. There's always some kind of entertainment.
In the 200,000 or so, roughly every month, is not a sign of a weak economy. I think the challenge, however, is one, inflation has already done its dirty.
Somebody says my neighbor set his house on fire. Yeah, jeez, I hope everyone's okay. But it's crazy. Just all the embers come down and land somewhere. Lots of houses almost caught on fire. Yeah, no kidding. It's a thing. And you get especially folks with old wood shake roofs. I just hate to be an insurance company during July 4th. I think I saw a chart somewhere. They're like firework related injuries by month, and it's just nothing. July. It's actually surprised New Year's wasn't even as high. July 4th, people go crazy.
And the bottom are not doing so well. And so I think
Fireworks are terrible for people with PTSD. Oh, yeah, I can only imagine from the military. Jeez.
a lot of the dissonance and noise and the ability to talk about the economy one way or the other, depending on where you sit in the income distribution.
Roger, always want to thank you for your insight on all of this, and we look forward to talking to you again.
Yeah, this insight really seems to be the classic, oh, we're coming out of a recession, not going into one. It's so annoying, just how unuseful I feel like the data is sometimes, because you look at the data and it's like, yeah, going into a recession. No, well, the data looks that way too when you're coming out of a recession. What? Oh. Anyway. So, all right, as you can see here, we've got a little bit of a downtrend on the Qs. And it essentially follows the data. Since we had the data, we had a little bit of a downtrend on the Qs. Bitcoin, cost stable. Rivian's not going anywhere. Coin is down 475 now. Nvidia is trying to bottom there. Tesla's at about 182. Enphase trying to get back over $100. Apple had a little bit of a bleed there, but only down about 17 basis points. Hood, Robin the Hood is up down 3%. I don't know why Robinhood's crashing. I guess it's been fluctuating, but let's write it up here. What about Palantir? How are they doing? No, Palantir's not really going anywhere. There you go. Qs are trying to come back. Trying to get some life back in after those jobs numbers. What other caddies do we have? Let's just find out. So we got the unemployment numbers today with the revisions. We got, 7-Eleven. So CPI's coming out soon, Thursday. And then a week from today, we get PPI and the University of Michigan sentiment. Oh, so next week's CPI week. How interesting. I didn't realize it was already so close. Just the year's just like flying by. It's just wild. Yeah, well. And how's our CNN fear and greed? Goes back to neutral today. Okay. Still sitting at extreme greed on market momentum. Yeah, when the S&P 500 is above its moving average of the prior 125 trading days, that's a sign of positive momentum. I mean, we're usually above it, but the question is, how far above? Quite a bit. Stock price strength. Extreme fear, breadth, extreme fear, extreme greed though on puts and calls, more calls than puts, safe haven demand. Stocks are riskier than bonds, but the reward for investing in stocks over the long haul is greater. Still, bonds can outperform stocks over short periods. Safe haven demand shows the difference between treasury bond and stock market returns over the past 20 days. Bonds do better when investors are scared. Stocks do better when they're not.
They come back a second time. So you may be on Squawk. It'd be like a third time on Squawk on the Street. Hightower Advisor, Chief Investment Strategist, CNBC contributor. I don't want to rush things, Stephanie, because there's a weekend. But I'm told next week we're getting the banks. So it's going to come fast enough. But let's go ahead and talk. What should we be looking for? That could be the next market-moving event, do you think, for tone?
Yeah, and this is my lucky day to be on twice with you, so thank you. I think in a GDP world of like 2%-ish, you're going to see 8 to 10% earnings growth. So I think I can't wait to hear from the companies, and always the first ones to report are the banks. And I think that since they are at the front line of the economy, they see everything. We're going to get great real-time information about the consumer and about the industrial economy and the growth overall. And so I'm kind of excited. And in addition, the steepening yield curve should help at not this quarter, but net interest income and net interest margins next quarter. So I think maybe guidance might be better than people think on that front. But overall, investment banking fees should be up double digits. M&A completed transaction volumes up 17% year over year in the quarter. Equity capital markets are up 9%, and debt capital markets up about 17%. All of this should lead to better earnings. You know these companies...
It should, unless you get a recession, like what Nick T is talking about. Take a look at this. The unemployment rate rose from 3.96 in May to 4.05 in June. It's now up 22 percentage points, or 0.22 percentage points since March. The SOM rule shows the 3-month moving average is up 42 pp's, percentage points, from the 12-month minimum of the same measure. That's getting closer to the 0.5 pp threshold of recession. This is what that looks like, by the way. The difference between the 3-month moving average and the lowest of the prior 12. And every time it seems to break a half, they suggest that you basically have a recession. So the last time this happened was during COVID, 2008, dot-com bubble, early 90s recession, 82 recession, also the 80 recession, and then before that you're in the 70s. So it pretty much, it doesn't misfire. It looks like once you break that half. Oh wait, but look right here. You broke a half right here, and you didn't. So that would be a misfire right here. I think that's the only one. Oh no, right here too. See, like 04, which is interesting because you had those spikes right after a recession. But we're a little bit further away than right after a recession already. See, these almost look like they happened within the same year. Some volatility thereafter. That's really interesting. But point is, we're now either like an 04 or 76, where you had the spike sort of right after a recession, or you're in one of these recessionary spikes. Crazy.
Shocker, obviously, the jobs report.
Bitcoin's a huge shocker, though.
That is a shocker. It was a 54 for a while. Looks flat on that chart, doesn't it? Looks like sort of unchanged for the last 6 weeks. Make sure you join us next week. Happy Friday. Squawk on the Street is next.
Good Friday morning. Welcome to Squawk on the Street. I'm David Finn.
Yeah, quickly here, Bitcoin now holding on to 55K. Q's only up about 10 basis points. A little bit of a weakening in the trend right here, with the exception, of course, of Tesla. And 3% on the hood. Robbing the hood. Hey, man, why are you robbing the hood? All right.
You got something going on. Let's get to our roadmap. It does begin with continued job market.
Any Rust people in the house? Heck yeah.
Tech stock rally, Microsoft, Amazon, and Alphabet all set to notch new highs at the open.
Plus, Tesla's bounce back, shares rallying again, on track for an 8-day win streak. It's the longest since June of last year. And the Labour landslide, the UK's opposition party winning a huge parliamentary majority in the country's general election, unseating the Conservatives after 14 years.
All right, let's get to that June employment report. Non-farm payrolls rose by 206,000. That was ahead of forecast. Job growth estimates for May and April, though, were revised downward. The combination there of those 2 months, 111,000 fewer jobs than had been previously reported. The unemployment rate hit 4.1%, and according to Rick Santelli, when I was listening earlier, last time we saw that number, or that high, was November of 21. Looking through the report as well, and obviously they analyzed it at length on Squawk Box, 74% of the jobs, government, education, and healthcare. And Mike, listen, we've been paying attention, of course, to yields in the bond market this week in terms of potential tell. I'm curious to sort of get your take on both the employment report and the impact on the job on the bond market and hence the stock market.
Yeah, the net takeaway is it's softer than not under the surface. So downward revisions to the prior 2 months of more than 100,000 jobs. There had been this somewhat perceived disconnect between the payroll report and the household report, which drives unemployment rate, somewhat weaker. So there's been a little bit of convergence there. Private sector job creation was below expectations. Average hourly earnings softened up. So in general, it still paints the picture of a cooling labor market. Bond market immediate reaction was yields rush lower. Now, not, to anything alarming, but basically 2-year yield down at 4.64, something like that. It's like where it was 3 months ago. So you had this little bit of a scare that maybe there was going to be this higher for longer story. It really does intensify the what should the Fed do in the July meeting, perhaps to set the stage for a September rate cut. I think you're starting to have that chorus sing a little bit more loudly in the sense that the preference is for the Fed to be somewhat orderly and proactive and deliberate in how it decides to ease off of these restrictive levels of rates. It still says it's restrictive. And if you'd want to go sooner than later so you're not rushing to rescue an economy that's really in trouble. I keep measuring things market-wise and economy-wise by the magic desired 1995 soft landing scenario. That's always been the idealized version of how you do it because unemployment actually didn't go up during the tightening cycle back then. It really didn't go up this time during the tightening cycle. You had 2 quarters of stalling economic growth in 95. Sub 2%. In fact, I think an initial report was below 1%. And so there was a growth scare. one cut, then another one several months later. It wasn't really a big easing cycle. It was just taking the pressure off. And of course, equities were at all-time highs, as they are right now. And so this general sense of, you can kind of loosen things up while you have the luxury of an economy that's still functioning pretty well at near full employment.
Yeah, another concern that people are pointing to was temporary help, declining 49K in June. And the swaps market, to your point, now predicting 72% probability for a rate cut in September, which, of course, we've seen this movie before with the swaps market being wrong in terms of when to expect rate cuts. But notable that you believe that there was potentially enough kind of friction in this report to suggest that September is still a likelihood.
Incrementally, yeah. And I guess the case is building is the way I would put it. Now, next week, you have the CPI report. That's probably got to get thrown into that mix as well. And we've been surprised at the stickiness of inflation along the way. But really, it is the cumulative evidence is, and we've seen the downside surprises in general economic data for weeks now. ISM services the other day as well. So all of that fits together into a similar story of, hey,
as they're talking about this, I was thinking about it, just looking, September does have a 0.79 cut priced in. So, in other words, that's of full cuts. There's almost an 80% shot of you getting a cut as early as September. And so they're right in saying you'd have to lay the groundwork for that in July, because that would be your only opportunity to do so.
As well,
yes,
was
exactly.
the beginning then. It's interesting to sort of put that in perspective of an incredible rally that I can well remember.
Yeah, I would say 95, we didn't have much of an inkling of the kind of multi-year, multi-decade tech renaissance that you might have.
But it was fueled by, obviously, a so-called revolution. Then it was the internet. Now it's AI, which does get us to these stocks you're looking at right there. Microsoft, all-time high. It's up 10% in the last month. You can see it. Apple has finally sort of found its footing after what sort of was a
Yeah, and Amazon broke out of its sort of trading range as well by getting above that 188 level. It's actually been doing pretty well. See, I'll show that to you so you can see what I'm talking about here. So if I go here, this was its all-time high. Is really stuck there. You got rejected, fell to the next fib, came up, rejected again, fell to the 100-day moving average, rejected again, fell roughly to the moving average, and finally a breakout. So, as far as the lines on Tesla, really the next stop is 258. If you smash 258, you're going to 295. So this is a pretty good breakout. We had a full candle breakout here, which is very nice. Look at that. Look how clean that is. That's a really nice breakout of that moving average, which means this should be a nice support line. Unfortunately, because it's a downtrend line, that support line it actually moves lower over time, right? Like over here is 231, but by next Friday, next Thursday, it'll be at like 229, and by in August it'll be at 221. So this downtrending support line isn't so useful. You'd really like to get over 258 and lock in sitting above 258. So we'll see what happens. Right now it's just cost that wants to start moving up again. Barely though, but it's trying.
Worst week in over a year in terms of performance. So
it's definitely decoupled with regard to the overall market or the NASDAQ. And the degree of decline in Bitcoin from the high, it's like down 25% off the highs. It certainly exceeds anything we've seen in any of those big stocks. That said, NVIDIA peaked right around when Bitcoin peaked. It's not so much that they go step for step, but it is a similar cadence. And of course, there are some unique factors with Bitcoin. People expect this supply of these sort of seized Bitcoin to hit the market. But to me, that's more excuse than cause usually, because it just shows you this market needed to back off a bit.
Let's get further reaction from the Biden administration to the latest jobs report. Joining us from Washington, D.C. is Acting Labor Secretary Julie Su. Nice to have you. A strong report, as we've been saying, although perhaps some signs of at least a weakening economy. I'm curious to get your take, particularly given a great deal of the jobs were added in both government, education, and healthcare. Travel and leisure, for example, seem to abate a bit in terms of its addition of workers.
Yeah, we saw growth in construction as well. Again, these are signs of a strong economy. And
They're just looking at Labor Department's just looking at like, yes, what's the good news here? I don't even want to listen to this propaganda. It's exhausting. 70% of the gains were in healthcare and government. I went to the city. I went to City Hall the other day, and they had signs everywhere. We're hiring, we're hiring, we're hiring. And I'm like, Usually they never have signs that they're hiring, and generally government and healthcare are your late cycle job providers because they can actually finally compete because the private sector has slowed down hiring, and so they can actually compete for hires. The 70,000 government jobs here, mostly at the state and local level. Oh, I see it. So, very interesting. Yeah, mixed bag, maybe slightly weaker is the way people are looking at it on the, than the expectations. I'm also just reading some commentary here. It looks like a lot of people are starting talking about the SOM rule. We have not actually seen it trigger just yet. And again, we don't know if it'll hold. So far, a lot of other recessionary indicators have not held. But we're still inverted, although we are steepening. We're at 32.76 right now on the spread between the 2s and the 10, which is also another recession indicator. It's just very, very, very slowly. Yes, moving slowly. Now, I feel like this is one of the first downgrades I've seen. New Street Research downgrades to neutral from buy. Yeah. If you start getting a wave of downgrades and their growth slows down, you're screwed. Or like Nvidia will fall. Yeah. No, this is inaccurate. Here's somebody posting semiconductor peg ratios. Look, I'm like Mr. Peg when it comes to this stuff. Nvidia's peg ratio isn't under 1. And I mean, you could go backwards, right? But then I think you're using a loony peg ratio. The trailing 12-month does you no good. Yeah, what I like to do is I like to take EPS for the end of the year, and then I want 4 years out. Okay, so if I do that for Nvidia, let's do it right now. It should be somewhere around 3 to 4 actually, which would be quite rich. I don't need to know what the past was. I want to try to understand the future. Okay, so 272 is our forecast EPS. What are we trading for now? We're trading for 128 divided by, well, now we're down 1%. So we're trading for 127. 127 divided by 272. 2.72 gives us a PE ratio of about 47-ish. I'm rounding slightly up there. And then the growth that we're projecting going forward is 35%, 15%. Oh, they've moved these projections up. They used to have a negative on the 4th year out. Oh, yeah. They revised them up. Okay, well, that's good. That'll help with the PEG ratio. Those just got revised. Okay, that's actually decent. Then that's going to move the PEG down, but not that low. It's certainly not under 1. It's going to be more like 2 divided by 4. We got about 20% expected growth. So 47 divided by 20 puts us about 2.35. Wow, the growth really got written up over here over the last week. So even just last week, they still had negative growth forecast for 4 years out. Very good. But again, that's still not under 1. So that's still, for a chip designer, kind of right where it kind of should be.
Perhaps his failure to successfully articulate what you are.
But yeah, it all comes down to what you think for projected growth. I see some of the comments asking about it. It's trying to understand what the growth is going to be for these chips is the hardest part. So, so if you have 20% or even 10% growth forecast, great. But if that actually falls to 5%, whew, it's going to be painful. Just because the overvaluation would be very high. But that'll be interesting to see if we get any more of these sort of downgrades in terms of price targets. Let's listen in over here. Let's get away from the labor sec.
contain those sorts of international flows, that are worried about France, that are worried about elsewhere in this world, and come back around to us? Can we continue to be that least clean, the most clean, dirty shirt?
So by the way, the first thing I will say is the reason why we have a dirty shirt or our dirty shirt is the debt in the U.S. is too big. And at some point over the next couple of years, that is going to be something that is going to manifest itself. So I would argue the U.S. is the most resilient, extraordinary economy in the world. It has the ability to take an incredible number of punches. And I always call it the flex economy because it has the ability to take so much pressure in terms of what happens around the world. There is one dynamic away from anything significant on the geopolitical side that I think we got to be careful about, and that is the size of the debt burden. And that is something we're going to
Train America talk here, huh? All right, let's see. Do we have anything else from Nick T? No, not really. But you do have some. This is interesting. On July 2nd, Jeff Bezos filed a notice that he'll be selling $5 billion worth of Amazon stocks. Bezos sold $8.5 billion earlier this year. Total it up, he'd be at $13.5 billion this year. He'll still own about $180 billion worth of shares. Jensen also sold, of NVIDIA, also sold about 169 million shares last month. Zuckerberg sold 34 million in June. Wow. It's a lot. A lot of selling. All right, let's listen in here.
Roughly here. So it's actually at the lowest that it's been trading at since February. And it's also lost roughly a quarter of its value since it hit that record back in March. Obviously, some of the hype coming off of the spot Bitcoin ETFs. Also still regulatory challenges here. Some individual movers, though, you want to see Marathon Digital down almost 7% pre-market trading. You're looking at Riot Platforms down about 5%. And then, of course, Coinbase down about actually more than 5% right now, Danny.
Okay, Jess, thank you very much. Coming up, we're going to go to the White House to get the reaction from this morning's jobs number. 190,000 was the estimate. We're
No, she was just on CNBC. She's doing the rounds. I don't want to hear her reaction over here. I'm trying to escape her. No. No. I will go to Fox Business before I listen to that labor secretary again. And they're on commercial. Of course they are. All right. Tesla's holding on to 2%. Nvidia down 1%. You had a 4.57 day on the last trading day, so pretty good. Bitcoin's trying to recover. It's trying. It looks like it went down there for a moment to 54.8. I mean, obviously it went a little lower just over the last few hours. Went down to 53.5. It's pretty close to my 52.4 line. You know, I was forecasting Bitcoin going to 58 a couple months ago. That's why I started shorting. But, you know, now it's past that. Now the question is, where does it stop? So, what number do you think it's going to stop at? Where is this the bottom? Is this the time to buy the dippy doodlah? I don't know. While some of you reply, I'm going to look at the real now GDP. We looked at this a little bit ago. Yeah, okay, it's at 1.5% right now, the forecast. So you've really fallen on those GDP forecasts. Next forecast is in about 5 days. So current Atlanta Fed real GDP now forecast. Yeah, that puts us pretty low. That would be sort of below the Fed's target. Although, let me see what the Fed was projecting. Fed, FOMC meetings. What I'd like to see is their last summary of economic projections. We'll be able to see what they were thinking in terms of, what's it called? GDP forecasts. And let's see how that aligns. So, if I jump into the SEP we got, I think June was the last SEP we had. June. Yeah, projection materials. Here we go. Okay. Here we are. June. So we had a GDP forecast for 20. Oh, wow. No, that's pretty low. Look at that. They're only projecting GDP to end at 1.1% for 2024. So they're actually expecting this lower GDP level, which is where we sit now, and they expect the unemployment rate to rise to about 4.5%. It's at 4.1 right now. Oh, that's quite fascinating.
In fact, he traveled a lot, all the way to Europe, and then people realized, yeah, but that was 12 days before the debate. And so now all of a sudden they're trying to say, well, you know, the Supreme Court is really a problem here, right? So in other words, if something's not working, you keep trying to shift it, you shift it, you shift it, you shift, and you can only do that so long before everybody wakes up and says, hang on, this doesn't feel right, it's not right, and we're not going to put up with it.
A lot of, back to why I generally don't go here. A lot of politics. Has to hold over 48 or we're in a bear market territory. Oh, new PM. Look at this.
Country first, party second.
So yeah, it's interesting. This it seems like they continue to get new prime ministers. You remember when you had Liz Truss, who couldn't outlast the head of lettuce? She actually lost her party seat, so she's completely out now. And Rishi Sunak, how long did he last? Like 18 months maybe? Rishi Sunak. He lasted, let's see how long he lasted. Let's see here. Okay, Prime Minister. Okay, yeah. October 22. Oh, okay, so about, that'd be about 2 months, plus 6, 8, plus 12, about 20 months. It's about what he lasted. Well, that's close.
From this Labor government in terms.
Somebody here says, 52K, but I loaded when BTC was 16. Nice. Yeah, Oleg, I didn't actually see that in the data. I saw Zero Hedge posted that, but I didn't see that in the data. Yeah. Liz only lasted 44 days. That's what it was, yeah.
Early in his term, it gives him a lot of cover to perhaps do more than has been talked about on the campaign trail. Certainly won't rejoin the EU, but perhaps tighten the trade ties which have been broken. That could be good for business. On the sort of overall fiscal plan, there's not much money to spend, and he wanted to play things safe because he thought it would lead to a big victory, and clearly it has. And there hasn't been much promises on more taxes, more spend, so we'll see how close he sticks to that. But they're both seen, Sunak and Starmer, coming into this election as ultimately centrist and pro-business.
All right. Well, we'll see you in the next hour as well. Thank you. See then. Wilfred Frost. Coming up right here, what to expect from the energy sector in the second half of 2024. The group did underperform the S&P. At least it has so far this year. You can see that on that chart. We got a lot more Squawk on the Street for you straight ahead.
All right. Just looking at the predicted odds here. Still got Donald Trump sitting at 57, 58 cents or percent out of a dollar. Kamala Harris still beating Joe Biden. Keep in mind, I really think once they replace Joe, once that happens, I think what you end up getting is you end up getting a potential reduction, like sell-off in the stock market. Mostly because I think you're going to price in some chance of a Democrat actually winning. The markets won't love that. Because right now, it just doesn't seem like you have a chance with Joe Biden leading. It's kind of seems unlikely. Very unlikely. Oh well. We shall see what the Democrats decide to pull off.
/arrow.
But wait.
Nope, nothing there yet. Oh dear. Ugh. All right, what's everyone gonna trade today? Who's gonna have the cojones to do 0 days? Who's gonna go for options expiring today? Out of the money. That's gonna be nuts. All right, so we're about 6 minutes away here and we'll get our everything all situated and ready. And we'll see how the market decides to trade off that jobs report. That was sort of a mixed bag. Honestly, I don't think it was that much of an indicator. I think the bigger concern is some of what you're getting signaled in it is starting to suggest we're getting closer to triggering more recessionary indicators, which isn't great because that could end up leading to a
selling spree.
Yes. That would be quite painful. Anyway, Coinbase down about 553. So Coinbase looking like something to enjoy some short tendies from. I don't know if it means it's time to load up on it. I guess the only reason that you'd load up on shorting coin is if you really thought this Bitcoin downtrend would continue. But otherwise, it did pass that 58K level. And it's a pretty big support right there at 52. Although if you break 52, I don't know how long that 48's going to hold. You might be down at 40. 42 is a lot stronger than 48. So somebody says AMD 0 days. Okay, all right. Yeah, 265 or 165 is a big level for AMD. Yeah, okay. All right, that's not too far out of the money. Oh, but 165, it is already 165. No, you're in the money. Nvidia. What does tendies mean? Profits, baby. Chicken tendies. You got to get your chicken tendies. Oh, somebody was swinging end phase calls. All right. Thoughts on DJT potentially being a call option for the Trump election win? I don't know. That would be very interesting because if he does win the election, you know, him using that platform will be, you know, pretty big source of news. So you'd think a lot of people would go there for content. So it makes sense, but then you wonder like how much of that is already priced in. You know, how much of oh yeah, as Trump gets closer to winning, does DJT already go up because of that? That's a good question. I mean, if I had to guess, it would probably go down over time. You know, just in general, mostly because the fundamentals don't exist. You know, it's sort of just moving as a popularity contest. It's kind of crazy. But that's how it works. All right, Tesla's not really keeping that rally going as hard as it was in the pre-market. It's at 1.5, but then again, you know, pre-market buying could settle down, and then you can get institutional buying, and it just takes off again. Nvidia is only down about 0.5% right now, so recovering. And looking at the Qs, going up here. Trend seems to be going up. Qs, throw BTC up here as well. Palantir's not really moving. Cost 31%. It's been where it's been. Enphase, Apple. Alright. Whatever. Let's see. 3 minutes to go until the entertainment begins. Alright. Let's see here. And everybody's on commercial, of course. Okay. Oh, what else? Yeah, everyone's on commercial. Fine. Nvidia's picking up a little bit here, even after that downgrade. Oh, wait. Wow. Look at that volatility, actually. Hold on a sec. What's going on over here? Is there some news or whatever? That seems a lot more volatile than it usually is. How interesting. Yeah, it was just up. Well, up to about only negative 30 basis points. Now it's just bobbing. No, I only see its price cut to new, or it's target. Well, whatever. You know, buy rating basically cut from buy to neutral. That's the robotaxi assumption there about Tesla hiring Travis. You know, I don't know. Depends how much they've actually got going on it for that 8.8. Is Enphase running? Yeah, I think Enphase under 100 is interesting. That's at 100 now. A little red candle there. The little red candle, that good. All right. Let's see. Oh, dear. Oh, dear. Oh, dear. Let's find out what the move is today, eh? Nobody knows? But the market is about to open. We are almost ready to go. Oh, here come. Here we go. 30 seconds away. Got a red candle forming on Tesla. Nvidia can't figure out its direction. The Qs are trying to climb, as is Enphase. Oh, as I say it, there's a red candle. Bitcoin trying to bounce off the 55. 200-minute moving average. All right, here we go.
Got this deal in the works with Spirit Aerosystems, which is what, $4 billion.
Yep. Big board. That's the U.S. Merchant Marine Academy that did the honors over at the NASDAQ. Industrial Manufacturing Company, Tongue Technologies. That's a recent IPO.
Q's rising pretty nicely. Whoever's got that AMD call, you got a nice little bounce right there. Bounce on AMD, Tesla. Nvidia's still kind of red, but trying.
Yes, exactly.
Makes sense.
It does. I think the key thing in the outset is how the bond market's script has been scrambled a little bit in the last few days. I mean, remember, we were just a couple days away a week ago, really, when we were dealing with, we have another melt up in yield, people focused on the fiscal situation, maybe handicapping the presidential outcome. And now this run of softer economic numbers has created this undertow in Treasury yields once again. So down to 430.
Okay. All right. Enphase now at about 2% here on Enphase. Looks like you've got Tesla's trying to figure out what's going on over here. This is why the first few minutes are always so dangerous. You might look at that first minute and you're like, oh yeah, all in on calls. And then you get that giant red right afterwards. Boy, that's always painful. Ooh, Coinbase. Nice drop there on Coinbase. 6%. Holy smokes. Yeah, wow. Okay. So, still bobbing around 55.4 here on Bitcoin. Big red candle there on Tesla. It's still up 1%. But wow, that's some crazy sell pressure right there out of nowhere. And Nvidia wants to run. Nvidia's pushing up. Tesla holding on. Not quite. Trying to hold on to that 1%. Nvidia's pushing. AMD's pushing. Somebody was talking about that AMD call option. Yeah, that's interesting. What's going to happen here at Tesla? Is this the buy the dip opportunity on Tesla? It might be. A lot of people looking at that, I'm sure. Let's listen in here for a moment.
But it feels as if there's a little more urgency to this question of maybe, the Fed's been dealing as if it had the luxury of patience and there wasn't a lot of risk to inaction for a while, waiting for the data to come through. And again, next week's inflation numbers are going to matter a fair bit for swaying that one way or the other.
And it's the usual suspects that are up. Apple, Meta, Alphabet, Amazon, Microsoft actually up 1 cent. And then Tesla continuing what, as we said, has been a very strong week for the automaker, although Elon Musk would not like to hear it called that, prefer to call it an AI company with a robotics arm and that happens to also make some EVs.
Sure.
I think is what he'd prefer. But the delivery numbers encouraging investors as well that we got earlier in the week. And the stock is now, let's call it flat for the year, approaching an $800 billion market value yet again.
Yes.
What it hasn't seen in some time.
To the point of whether it's, in the here and now, a car company.
Tesla's almost red here.
I think probably had the effect of taking a little bit of risk out of the earnings report, which is coming up, later this month. And the idea that you could start to make the case that things are bottoming, demand is responding to, more financing incentives and things like that. And in general, we've maybe seen the worst of the declines in terms of volume growth expectations. That being said, it just was a laggard in the mega cap tech-related beta trade, and those laggards are getting bought. And there has to be some place for the wild, sky's the limit energy that was fueling NVIDIA to go. And one place it goes is Tesla. There's also lots of overlap. I don't know how we can handicap this. There's a lot of overlap between people who would be excited for a second President Trump administration and people who generally are excited about anything Elon Musk touches. So I'm not saying that's the whole story or even most of it, but it's all traveling in a similar direction, I would argue. And then you have this August 8th robo-taxi event, and Tesla stock does best when there is something dangling out there that says, hey, this is when they're going to tell you how they're creating the future. Whether it happens or not, whether the timeline is plausible or not, it doesn't matter until you get there.
Yeah, August 8th, of course, is when we hear about the robo-taxi, or at least get the latest and perhaps a lot more details in terms of full self-driving.
Yeah.
But before then, guys, I don't know if you realize this, being that it's just after July 4th.
I know what you're going to say, bank earnings
season a week from today.
Yeah.
And we've already started to get a slew of preview notes, kind of giving us a sense of what to expect. We got one from Mike Mayo of Wells Fargo on Wednesday, shortened trading day, but that is not stopping the research from coming out. He actually Mike Mayo increased second quarter estimates on capital markets-oriented players. I know that'll pique your interest, David.
Yeah.
JP Morgan, Goldman Sachs, Morgan Stanley, and lowered on several regionals, including KeyCorp, Comerica, and Truist. Those downward revisions on the regionals reflected some weaker net interest income commentary, which I believe we saw out of some conferences, including the Morgan Stanley Financials Conference a few weeks ago. There's been this overarching question, and this kind of goes back to our rates discussion about when you'll see that inflection point, when you'll see that trough in net interest income. And a reminder to our viewers, that's the profitability metric from loan making, and whether or not higher for longer interest rates will impact when that trough happens, whether it will have to be pushed out further beyond the 2Q, which is what a lot of people were expecting. So Mike Mayo focused on that, the prospect of that trough getting pushed out even further. And then, of course, you have this story in the Wall Street Journal today, which is an interview with Marianne Lake, who runs basically Chase and consumer banking for the bank, talking about how regulations are impacting their need and the potential for their need to pass down some of those fee restrictions onto customers. So the story goes into this idea.
Costs halted already? Yeah, it doesn't surprise me.
Proposing of an $8 cap on credit card late payment fees, a $3 cap for overdrafting bank accounts, plus these bank capital rules that we've talked about many, many times on this program would require additional fees elsewhere for consumers. And Marianne Lake is quoted in saying the people who will be most impacted are the ones who can least afford to be, and access to credit will be harder to get. In other words, those fees may be capped in certain places, but you will see additional costs pop up for the consumer elsewhere.
Yeah. Looking at that chart, especially the even shorter term one, there it is. The last earnings report, this stock got crushed. Now, it's made it all the way back, as you can see, and is right around the same performance as so many of the other big cap banks, Bank of America, Citi, Goldman, and Wells Fargo, all sort of up somewhere around 21 to 25%. But that was an ugly report. You might want to just refresh our take on it, because going into next week, it might be worth remembering.
Yeah, no, a lot of it had to do with that NII inflection point that we were talking about and the guidance that they gave.
All right. Let's see what we got over here. So, looks like you've got AMD jumping on the VWAP right here. Then you've got NVIDIA somewhat declining. You've got AMD. Well, NVIDIA's not that bad. It's just mostly sticking sideways a little bit here. So not great for that one. Then let's see, AMD's trying to come back here, get a little bit of life, a little bit of lifeblood. Then you've got Tesla. Looks like it's trying to recover a little bit, find a little bit of a bottom there. That's what it's looking for, at least. And then what else do we have here? We've got the Qs. Qs are moving up very, very nicely. That's a good move right here. Very good. And Tesla nicely recovering also right now. Look at that. That's about 40, 41 right now. It's trying to go green again. Not bad. And then you've got, maybe is that the buy the dip opportunity? I don't know. You've got Enphase trying to push a green here. Bitcoin's pushing green, which looks very nice. Qs. Yeah, there goes AMD. Nice little push on AMD to the upside. Ooh, Tesla's almost green again. And I don't know how if it'll hold. And then you've got Coinbase down about 6.3. Wow. Yep, there goes Tesla. Tesla's green again. Wow, look at that. That's incredible. Absolutely incredible move there on Tesla. Very, very nice recovery. Let's listen in back over here.
Every other bank was monstrous. It was just tremendous. So every sector has like the one big anointed defensive bulletproof name, and that was JP. So it's not quite the same this time around because the other banks, David said, kind of have participated in
other than one,
months.
Leslie, which is Morgan Stanley.
Yeah.
Under new leadership.
Yeah.
It's still up, but it is lagging noticeably. Why?
A lot of it has to do with some disappointment surrounding net new assets. Obviously, wealth management has now comprised about 50% of Morgan Stanley's revenue base. So you've got 50%, which is tilted toward the capital markets, which have been not the best, although it sounds like Mayo thinks they could improve.
Yep.
And then the other 50% is this excitement surrounding wealth management, which has historically done really well. It's become this behemoth, obviously, under James Gorman's tenure. That was kind of the hallmark of his duration at the top of this firm. There's some concern among the investor community that that's stagnating some, and that has kind of created a bit of an overhang on this stock so far this year.
Yeah. We on M&A, I would only say that I'll be paying close attention perhaps as soon as later tonight, this weekend, whether we get that final deal for Paramount that we have outlined so many different times. That seems to be the expectation going into this weekend. I had sort of said that already on Wednesday. I'll be very interested to see the overall capital contribution, what that looks like, because you are talking about $7.75 billion or so in new equity. Remember, $4.5 billion to buy the Bs and some of the As. The Bs at 50% of the Bs, $15, $1.5 billion contribution to the balance sheet, and then the money as well going to pay Sherry Redstone some $1.75 billion.
Sherry Redstone. All right, let's take a look here. So Tesla just went back down into the hole. Some anger over here at Tesla. It doesn't want to really hold up. You're really barcoding on AMD, so a lot of sort of sideways movement here. But Tesla, if Tesla loses this 240s, it probably goes to 230. Just a heads up. So then you've got 55.8 right here on BTC. Qs have stopped kind of moving up as much. AMD's, again, it's got a green candle here, but you got a lot of barcoding going on, so, TBD, the direction here. Tesla's at about that negative 1%. You've got Salesforce at about 1%. Amazon's got a nice movement to the upside. Palantir out of nowhere comes up 3%. That's actually a really nice move there on Palantir. I was watching that this morning, and I'm like, oh, it's not going anywhere. Where's it going to go this morning? And, yeah, wow, crazy. All right, so let's listen in again over here for a brief moment, see what we got.
Some interesting deals this morning with regard to the Saks and Neiman, with the Amazon infusion there. There's reports that the Macy's bid is getting raised as well, so there's some fervor surrounding these department store names, which is kind of an interesting note for this holiday week.
Yeah, Apollo's, I think their credit fund providing some financing as well to that transaction you're looking at right there. And then, as you point out, Brigade and Archouse in terms of Macy's. That's a report from the Journal saying they've raised, although it's unclear how much traction they're really getting there. I haven't.
Macy's, whatever. It's kind of boring. All right, I'm still watching over here. I'm watching what's going on with some of these. Looks like AMD just slipped a little bit under that VWAP. Not so ideal. Looks like you're getting a little bit. Ooh, that's because you got an NVIDIA dump right here. Wow, that's not great. So it looks like the market might sort of broadly be taking a little bit of an oopsie doopsie here. That is not good at all. What is going on? Oops. Sorry, I didn't mean to slide up CNBC there, right there. That's a little odd, though. Let's take a look at that. What's going on? What's going on? Hold on here. Somebody's donating about Fubu. Fubu? You think they can make it solar get bought out? I've been watching it. Oh, I don't appreciate the $20 donation there, but honestly, I don't know anything about that one. Nothing. I'm pretty clueless. But Leah, look at this. You're now getting the chip sector selling off. Oh my gosh, that NVIDIA sell-off. Yikes. Wow, okay. That is a crazy little candle you just had there on NVIDIA. It looks like they're going to get a little bit of a recovery after that, but wow. The Qs are now trying to rotate as well. Not exactly sure what's going on here, but you've got... yeah, trying to hit a bottom there. That was crazy for just that random minute there. We got to watch that happen. Palantir doesn't care. Palantir seems like it's going to enjoy its 3% right here. Yeah, somebody says rip Pelosi. Oh, she did just, in fair, yeah, she did buy NVIDIA. I think she moved from options to stock. And then it did look like she, what's it called, sold some Tesla stock. One of your famous insider traders. 55.7 on BTC, which still seems, more optimistic than what we had before, but Enphase just gave up over here, so not sure what's going on here. And then you've got what do we got here? NVIDIA. Yeah, NVIDIA keeps wanting to push down. That's not great. Let's see here. Okay. CRM, yeah, CRM's hitting a little bit of a red there, but not much. Still, CRM, Palantir, Amazon, they're moving up. Cost is suspended. On a decline, it gets suspended. Meta's up 2.5%. Wow. And Tesla's still holding on to that 1%. Not great. Not a great sign here. Okay. Let's see here. Okay. So, let me see here. Let's get some of these. It's so difficult to post screenshots while at the same time trying to do these, what's it called? Live streams. Anyway, working on that. So, what else do we have? We have... Who's this? Who's this guy? Energy Playbook? I don't care. I'm gonna go listen in over here to Doomers. Let's listen to the Doomers. La la la. La 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 la. Okay, what do they got?
As you know, it is absolutely critical that this...
This is boring. Bitcoin, somebody says, moving up. Rivian moving down. Yeah, I don't know why the market seems so red today, but I think puts might be the play today. I mean, look at this. Yeah, Rivian's down about 4%. Tesla down 1.5%. Coin's actually trying to recover a little bit here. But you've got NVIDIA. Look at that. NVIDIA bouncing on the 125 line. Bounce right there on 125 on NVIDIA. You've still got Tesla at about 1.5, but very, very low volume here, trying to recover a bit. AMD's gave up when NVIDIA gave up. I mean, NVIDIA choked. NVIDIA just absolutely choked over here. I don't know if it was the downgrade or what, but you had a great uptrend going on AMD, and that just got rugged. Absolutely rugged as soon as NVIDIA decided to vomit. Tesla is trying to move back up again. Nice green candle right here. Pretty low volume. So let's see if volume moves up and pushes this in either direction. Could just be a sort of morning sell-off here. But yeah, AMD is trying to come back a little bit again. AMD is bouncing right on that 125. So if you wanted to go bullish today, that 125 could be an interesting line to watch on NVIDIA. Tesla just gained about 1% there. Very nice. And Salesforce back to kind of trending up on Salesforce. Nice trend on the day there. That's pretty good. Palantir's slowing down though, and Amazon's back over 200. Yeah, BTC 55.5. Qs, nice move on the Qs back up here. Enphase negative 76 basis points here. Rivian's trying to bottom as well at the moment. Lot of aggressiveness here on Tesla. Let's see if it can hold. Volume does not really suggest it will, but the MACD does say we should be going bullish here for a moment. Let's see if it can hold as NVIDIA tries to come back to life, as the Qs are as well. Listening in, I don't really care about that, Doomers. Let's go back in over here. And see, somebody says Tesla, no, all on commercial. Someone says Tesla VWAP resistance. Maybe, you got a little bit of room to go before you get there. But VWAP's 247.03. Maybe, let's see if you get rejected there. But you got very low vol right now. That volume's sort of declining. NVIDIA's trying to recover. Trying to go for a recovery here. So is AMD. And it looks like Tesla getting that red candle again. So Salesforce trying to figure out its way. All right, what else do we have? Rising unemployment is a red flag for stocks, is a note coming through. While today's unemployment reading hasn't yet triggered the closely watched SOM rule, the uptick would be consistent with other versions which have foreshadowed equity losses. Oh no. Okay, Fed rate cut odds unchanged. Yeah, still pricing in some chances of a September cut there, though we haven't gotten the foreshadow yet from, what's it called, from the Federal Reserve. So still no enthusiasm there, so to speak, for rate cuts. All right, all right. Let's see here. Then we have, what else do we have? Let's see here. We have Qs rotating back up. Nice recovery to the positive side here. So you had a bit of fear there for a while, but the chip sector doesn't seem to want to hold. NVIDIA's trying to, but AMD can. It gave up its trend. Tesla's trying to come up, but boy, it is struggling today to get to that positive level again. And Salesforce wants to keep running right here, getting some nice increases in volume on Salesforce. But cost is back at plus 42%. Looks like it was running more there and started selling down a bit. Apple's nicely up on Apple, 223. I feel like they'd make a good long swing trade going bullish on them, but yeah. And some have said the same thing about Enphase too. Got some nice volume here under that $100 range. Seems like, but I mean, you've seen it go to 79 before. So let's zoom out here. Yeah, it went to 95 just a few days ago. And it's been here at 98 before, a few times in the 90s. Except you did have this sell-off over here that took you down to 73 for a moment. Yikes. Yoinked. All right, so no trend there. Is AMD going to try to come back or not? It's trying, but boy, those are the average candles. It's really struggling to keep it up there. Yeah, NVIDIA's pulling off a red again. Now we're getting red again on the Qs, getting red again on BTC. It's a little bit of a bearish day. Still up on CRM, but yeah, we'll see which direction that goes. That's the only one that's really consistently pushing up right now. Everything else seems to be a little pained. Well, and cost. Cost is now 52%. No stocks over here for you. Oh, Meta. That's true. Meta was moving nicely. It's flattened out already a bit. Let's see larger movers in any direction here. We've got cost, ARM. ARM up 3%. Not bad. So is Palantir. Very good. SunPower's down 10. Yikes. All right. Let's see here. Let's see what else we have. Let's go. Yeah, Q's all over the place. Oh, Tesla's about to go green again. And it's green again. So let's see here. Let's listen in Let's see what good old Fox Biz has for a moment. If they have anything at all for us. No, they don't. Okay, what about the Doomers? Doomers, what do they have? Doomers have...
has seen her favorability
Harris.
rise in our own Bloomberg swing state polling since she's taken on the mantle of a spokesperson, the face of the issue of abortion. So imagine a world in which Kamala Harris is tied up with, say, a popular Democratic governor, a Roy Cooper, maybe Governor Shapiro. There are a lot of different ideas about this right now and could have a very interesting story to tell for Democrats, as opposed to throwing all of these pieces up in the air and starting from scratch in some sort of mini primary. A contested convention in Chicago in August could be very disruptive for Democrats, as Donald Trump learns now.
They'll never let that. They'll pick someone before that.
And he's going to soon be naming a vice president, making a lot of news in Milwaukee just a week away.
Yes, let us not forget that, Joe. A busy month, a couple months ahead on the road to November 5th. Bloomberg Balance of Power co-anchor Joe Matthew there. Now, coming up, the market-moving events that you need to be watching as we wrap up the week. That's next in our Trading Diary on Bloomberg.
Trading Diary. Yeah, all right. Let's listen over here.
Survived the attack, but it's not just Texas, an attack in Florida as well.
Oh, okay, Fox Business is going to talk about shark attacks. Okay.
Itself as the shark bite capital of the world for the number of attacks that happened there. This time again, 4th of July, 4 p.m. Young man from Ohio, 21 years old.
Let's, how about we go over here to CNBC instead? Because they've been on commercial for like 10 freaking minutes straight, it seems. Oh my lord. What a joke. That's all right. All right. So what else is going on here? Tesla's right at VWAP, really trying to find a direction right here. Looks like that direction right now is up. You got a nice move up there on Tesla. It's up about 35 basis points right now. Let's see if I can hold that VWAP breakout. But the day otherwise somewhat bearish on the chip sector. AMD's trying to come back to its VWAP as well. It was really NVIDIA on its downgrade that started pulling things down a little bit. It's not great. Q's moving very nicely though. You got to give it to the Q's. Very simple to trade. It just goes up. Check Reuters. What do we got? I don't see anything there. All right, let's try over here. Nice jump there on the Q's.
Is back at HQ with a look ahead. Hey, Seema.
Hey, Leslie, listen, the demand story still remains strong. We had the latest data from MasterCard, which shows travelers' intentions to go overseas remains high, helped in part by lower airfare. The May inflation report did show that airfare prices dropped by 6% year over year. And then there's those major events this summer driving interest to Europe, from Taylor Swift Eras Tour, the Euro Cup, to the Paris Olympics. That's fueling deal activity as well. Hyatt just announced it's acquiring an urban lifestyle brand in Germany, which is a feeder to other vacation hotspots like Greece and the Balearic Islands. Right now, Hyatt generates just 5% of its earnings from Europe, while Marriott is at 15%, Hilton at 10%. That's according to Truist estimates. Hilton did recently acquire a majority controlling interest in Sedell Group to expand the London-based luxury brand Nobad Hotels. And private equity has also shown interest. Just last week, Blackstone acquired Village Hotels. That's a group of 33 properties in the UK that appeal to business travelers. Matej Shah at Noble Investments, who has invested about $2 billion in hotels and hospitality in the last 18 months, says valuations are driving the broader activity in the space, with public hotel REITs trading at 10 times EBITDA. That's a 25% discount to private market values. He adds that hotels are also seeing sizable returns, even with interest rates remaining high. And growing supply, guys, that's one of the key ways these hotels...
Yeah, and one of the things, you see a lot of higher dividends on some of these plays as well, some of these REITs, just because there's so much, people see perceived risk in these.
David?
Seema, thank you. Seema Modi back at our headquarters. And Mike, thank you as well, as always, for joining for the hour. We got a lot more coming up on this week's tech rally. NASDAQ, new all-time highs. Keep it right here.
Dude, they've had so many commercial breaks.
Goes on uninterrupted, because when you're Generac...
All of them. For so long.
Puppy school?
All of them. What a joke. Anyway, looks like you've got a little bit of a drop here on Tesla at the moment, but it's really coming after it just rallied, like, honestly, like 2.5% is what you just had on Tesla. It just ran up 2.5%. which is pretty wild, but good for Tesla. And it was falling. We were down, once we broke zero, we went down to about negative 1.5% there. And now you're seeing, a little bit of a red candle creating, but nothing huge here. So we'll see how this kind of keeps going for Tesla. Okay, so with that, let's see here. You've got the Qs, really nice movement on the Qs. Starting to get a little red candle there as well, but that's all right. Nvidia, little red. Bitcoin, 55.8. Bitcoin rising. I mean, this is sort of a bullish indicator broadly for the market here, so not bad. Let's see here. Okay, what else? Nvidia wants to kind of push a little bit of a red, I see. A little bit. A little bit more on the red there. But nothing super violent like we had this morning. I mean, really at the open, it seemed like you had a lot of sort of violence of like, we're going down with the ship. And some of that's really relaxed now. A lot of commercials. Okay, what do we got over here? Nope. Foxbit, commercial. Everyone's on commercial. Literally everyone. That's all right. I like listening sort of in the background and then kind of watching to see what's going on with the sticks. You've got Tesla moving again. It looks like, trying to go for that moving average again. Trying to break the moving average. Qs topping out at 0.5% up. Nvidia is still trying to rotate down here. Almost up 1% on Tesla. And let's see what happens with the direction. Let's look at news. Rise in unemployment. We talked about that. We talked about yields. Yeah, let's look at the 10-year quickly. See what's the move on the 10-year. 10-year is down 3.2 basis points right now. And let's see what else here. Okay, here we go. So oil up about 4 basis points. Gold's sitting just under 2,400 on gold. There, Tesla's trying to push those moving averages. All right, let's listen in over here.
Good Friday morning. Welcome to another hour of Squawk on the Street. I'm David Faber with Leslie Picker and Wilfred Frost. We are live from Post 9 at the New York Stock Exchange. Carl and Sarah have the morning off. Let's give you a look at markets. A half hour into trading, we are up on the S&P and the NASDAQ. That's new territory when it comes to the NASDAQ, certainly. Leslie?
We are 30 minutes into the trading session here. Three big.
No, the Nas just keeps going higher. It's crazy.
Tesla aiming for its 8th straight day of gains, up around 40% over the last full month of trading, trying to close in positive territory year to date. Currently, shares are up about 1%. Plus, watch Bitcoin sharply lower, down more than 20% over the last month, hitting its lowest level since February. We'll do a deep dive on the cryptos later this hour, but currently down about 4.3%. And Macy's shares are rallying following a report that Ark House Management and Brigade Capital Management have raised their takeout offer for the retailer up to $24.80 per share.
Well, the American economy adding slightly more jobs than expected, but the unemployment rate ticking higher. Our Steve Leisman's here to break it all down for us. Good morning to you, Steve.
Hey, Wilf, good morning. Yeah, it was a strong June jobs report that came with considerable signs of weakness under the hood. If these trends continue, it's going to give Fed officials something to think about over the summer. Here are the numbers. We're at 206, right around what was forecast, but these April and May numbers were revised down by a combined 111,000. It's been a continuous set of downward revisions. Unemployment rate ticking up 4.1%, first time above 4% since November of 2021. Average hourly wages behaved at 0.3, bringing the year over year down to 3.9% from 4.1% back where it was in the prior month. And here's where the jobs were, interestingly, and we'll talk more about this in a second, local government jobs, local and government, that's federal.
Yeah, we kind of saw this already.
Local. That's 70,000. Healthcare, 49,000.
Let's jump. Let's see what we got over here.
United Kingdom, whoever that might be, the view is it's going to be David Lammy, will have to be renegotiating that. They want to make
Q's still going up here.
When it comes to animals, when it comes to the understanding of people's qualifications, the ability to travel, move abroad.
All right, let me ask the dumb question of the day. You're flying from London. Let's say you're going over to Switzerland. Do you have to do passport stuff.
Yes.
Oh,
man.
And you still voted for that as a
I mean,
country.
not.
I mean, for no other reason, I would vote against it.
I mean, well, this is where the generational divide comes,
okay.
right? And I think that's the difference between, and I'm not here to pass politics, but Brexit really divided generationally, not just between area from area. And it's mainly because the youth were like, really? I can't travel and work in Europe anymore? That's a bummer.
Exactly. All right, good stuff there. So we're looking at these.
People would take the channel over. That's always interesting, unless you get a headache on it, like I do sometimes.
We've got to keep a close eye on what's happening with the euro as well. And indeed, look, this isn't the only political risk that we've had. We've got the drama to come on Sunday over in France.
Yes.
Euro, little changed at the moment versus the US dollar, but actually, we've seen that call from Morgan Stanley yesterday saying buy French stocks ahead of this election because we're likely to see actually the worst case scenarios for the markets at least not come to bear. Yes, there's going to be some sort of stasis in terms of ultimate policy making in France and a messy coalition likely, but they do feel that it's all been priced in.
All right, very good, Caroline. We had that unemployment data came. We had the non-farm payrolls came in at 206,000. So it looks pretty decent, but we had some revisions. I think we're supposed to pay attention to those revisions. I know Michael McKee does. Michael McKee covers all the economic stuff for Bloomberg. Michael, what did you see here today?
Revisions, sort of like a dead fish being slapped in the head, getting slapped in the head with the dead fish, because it took the joy out of 206,000. We got 206,000 jobs added, which normally would be good, but the prior 2 months revised down by that significant amount. It sort of leaves us with the narrative that the economy is slowing. We don't know how fast, but it's definitely going down. The revisions show a weaker underlying labor market. That's the ultimate story about all this. Unemployment did go up to 4.1%, but it was barely up over 4% because it was 4.054. So rounding it.
Did we do that?
It wasn't huge. Well, I'm sorry. It is No Math Friday, I guess. Big gains for healthcare and government, which are not rate sensitive. That's the thing. But service industries only gained 117,000. So it does appear maybe the Fed is slowing demand. Companies are slowing their hiring process. And if all that's the case, then we're likely to see continued progress towards a September rate cut. Although the interesting thing is you look at the markets this morning, and they have barely changed the odds of a September rate cut. It's about 70,
Somebody says, Kevin, how do I get back to wanting to work for companies that don't care for their worker? I know California more worker protected. It's just, what do you mean? How do you companies that don't care for their worker? Companies don't care for their employees. I don't know. I don't think you should work there. Find a different job. It's not good.
Not to age you, Carol, but more than 25 years experience in wealth management and family office focus. Carol, was this a kind of Goldilocks moment when it came to the jobs data? Michael McKee really highlighting there, look, from a sorts perspective, look, the market isn't any changed on whether or not we get that September.
No, this was such a mixed bag jobs report. I don't think this really did anything for the markets today. All right, you've got Tesla getting sort of rejected by its moving averages here. We'll see what happens with Tesla. Who knows? It could, what it's been doing lately is it just skyrockets all of a sudden. Although Nvidia is plummeting right now, on a minute candle. So whatever that's worth. It looks like you've got Coinbase hitting a little drop here. Nice drop on the Qs. I don't think we got any kind of data there, but I still feel like today's just a bearish day. I don't really know why I feel that way. I mean, it's just maybe it's that Bitcoin sell-off. Maybe it's just the mixed jobs data. Maybe it's because things feel a little toppy. Oh, okay, AMD started running again, but now it looks like it's coming down a little bit here. A little bit of a downtrend beginning here on multiple different stocks here. Tesla trying to VWAP bounce after getting a little bit of pain there in the, what's it called, moving average reject. Watching, even Nvidia is trying to come back again a little bit right here. You've got Coin, also trying to climb. It's down 4%, yes, but it's nowhere near as painful as what happened to Bitcoin over the last few days. Coin's actually been somewhat trading range bound in that 218-ish range there for a while. Nvidia's coming back, so it looked like that I saw bullishness at the beginning of the day on AMD, and so it really started continuing here. That seems to be holding. As far as the Qs, big red candle now coming back a little bit. Tesla still dropping a little bit. Let's go back in over here for a moment.
All market investments, whether it's portfolios or individual stocks, you're essentially getting the market unless you are smart and pick a few of the big market leaders in tech, then you're going to get an outperformance. But alternative assets are somewhere between 30 and 40% of family office portfolios. So it's a big number, and that's true globally. That's from a
real
UBS
estate is
study
considered an alt as well.
over thousands of global family offices of all sizes. So yes, alternatives are exciting. And RIAs are starting to get into that because the big sponsors like BlackRock or Goldman to offer them in smaller chunks to the RIAs so that wealthy individuals as well as family offices can invest in these things.
I really like the point you made about international money flows and then coming into the United States. The US has been the game in town largely because of the magnificent 7 that became 5. Maybe Tesla breaking back into positive territory today on the year means we're back to potentially 5.5. But I'm interested from your perspective whether that AI run, whether that no matter which direction of travel that jobs go, we still go up, is still in place?
Yes, I think so, because again, there's so many industries that are just starting to think seriously about how to include AI in their strategy. Look at utility companies, the tremendous additional efficiency we can get out of our power grids if we use AI on all the utilities, but not everybody has bought all their equipment yet. So there will continue to be a shortage. And until a really strong alternative to NVIDIA shows up, that is still going to be the best way to play the AI trend. If you look at some of the AI ETFs, they just aren't making the cut because really it's a one stock story right now. Same with Ozempic or some of these other, trends that are very big. There's 1 or 2 leaders and everybody else is trailing behind the big fish. So if you're going to get into that trend, you might as well just buy it.
Yeah, you got a little bit of a chunk down here on Tesla. Looks like NVIDIA is trying to rotate down a little bit as well right now. And so are the Qs. A little bit of a blow off the top maybe on the Qs.
So market leaders will continue to dominate. Growth will continue to dominate, in my opinion, and so will tech. This market is kind of more of the same.
Everybody all in on tech. Tech.
Some of the things going on in Europe right now, the war dragging on, is still attractive, very attractive to non-U.S. investors.
What about investment, though, in emerging markets? We have seen that AI trade benefit SK Hynix, Samsung, numbers from Samsung looking really good today. Are you looking at Asia, maybe not at China, but everywhere else, and emerging markets more broadly?
Yes, definitely. I think there's always a place for diversification. You can't just buy 3 stocks if you have a huge portfolio. Obviously, the institutional model still works. You want to spread your risk over a number of asset classes. And Asia ex-China is doing extremely well. It's ironic. We used to always say Asia ex-Japan, but Japan is coming back, and now China, unfortunately, is the country that we kind of have to avoid because of some of the sanctions. So there are emerging market ETFs now that have come out, which are Asia ex-China, and they're doing quite well. That's a good way to play it, like EMXXX. That's one we can look at. I also like the nearshoring trend in Mexico. That's a little harder to play in the public markets, but I would say that many family offices are doing direct real estate deals across the border because a lot of the nearshoring manufacturing facilities, warehouses, et cetera, are relocating to Mexico rather than shipping goods in containers from Asia. So that trend is going to accelerate, and Mexico is exploding. Even with the left wing, let's say, I don't think that Claudia is going to do anything to wreck the golden goose of this in business in the United States to stay in power. So I do think that that trend is going to continue and accelerate. So Mexico is great to look at. Asia ex-China is great to look at. Quite far abroad, often partnering with other families from those countries to do direct investments.
Hey, Carol, thank you so much for joining us. Really appreciate it. Carol Pepper, Pepper International CEO, giving us her thoughts on these markets. Stay long. Big tech, how about that? Right now, let's get a market update. Let's bring in our good friend Jess Metten. She covers all the markets for Bloomberg. Jess, what are you looking at here?
Well, when it comes to individual movers, I feel like since Tom Keene has exited the radio studio, I am allowed to bring up Bitcoin now. So if you're looking at where it is trading around 55,500 roughly here. So it's on pace for its 4th consecutive day of losses. It's also dropped around a quarter of its value that it's lost since its March record there, just because of obviously the hype around the spot Bitcoin ETF kind of fading a bit there, and then obviously the regulatory hurdles. Want to bring up a couple of individual movers though. Marathon Digital, if you look at that stock, MARA is also lower. It's down about 5%, so on pace for its worst day since June 21st. Riot Platforms also lower, down about 3%, so also its worst day since June 24th. And then you do have Coinbase, COIN is the ticker symbol, is also down about 4%, Paul.
Yeah, I mean, I was looking at some of these moves here in the market, and Bitcoin got my attention because, first of all, Tom doesn't like to talk about it, so of course I raise it every opportunity. To me, I have no idea. So somebody tonight's going to ask me, as I'm sitting there with my pizza and beer at the Swan Tavern, what's going on with Bitcoin? I have nothing for them. Do you have anything? I've got
well,
nothing.
there's worries about selling, right? So Mt. Gox back in the day, now we understand it's moved to wallets, that sort of crypto that eventually will be given back to creditors. How much of that 8 billion will be sold? What then also of happening, the German government starting to offload some crypto that it too had taken hold of. So there's a lot of a supply side issue going on here, and that's why also the miners with the halving have been struggling in particular, and they're making less money off the mining process.
That's right, especially because, to Caroline's point, so German authorities, they are actually preparing to sell around 50,000 Bitcoin that they had seized earlier from online criminals. So you have that, and then to Caroline's point as well, when you're thinking about Mt. Gox, the sort of failed exchange there, they're returning about $8 billion worth of the hoard of Bitcoin to creditors, Paul.
There you go.
There you go at the Swan.
There you go. That's good enough for me.
You can give a few pearls of wisdom, Paul. Meanwhile, coming up, look, we're going out to a rather beautiful Aix-en-Provence economic conference going on. The former EU Commissioner, Michel Barnier, is going to be joining our own Caroline Conan. Tune in. This is Bloomberg.
All right. Let's see. We're going to head over probably to our course live soon, but we got a little bit of extra time. Let's listen in to see if... Oh, they're on an ad too. Okay, so just broadly looking here, it looks like, you know, the Q's topped out, though you're trying to come back on the Q's. You had NVIDIA that really, what's it called here? You know, it's bounced off its 125. You've got Tesla that's somewhat trading sideways here, up about 0.5%. So you get about 0.5% of a move over here. Nothing super major. It looks like it's trying to push up again, though. Doesn't seem to have the volume that it used to have. Let's see if we can zoom out here on the days here. Yeah, so volume looks like it peaked out. Not the last trading day, Wednesday, but on Tuesday it looks like volume peaked out. And then so far we've got about 48 million shares traded, which does align with, I mean, obviously the day's not over yet, but it's hard to tell where most of your volume is going to come in. If most comes in the morning, that's going to be hard to line this up with the other days. Let me go out to the hour candlesticks. Yeah. Look at that. You can see volume peaked out 2 trading sessions ago. And this first hour candlestick looks like it's going to be lower, though we haven't finished the first hour yet. Let's go to 30-minute candle. 30-minute candle is slightly lower than what we've had. So, volume somewhat declining. One of the downsides, though, when volume starts declining on these, is you might end up going into a position where you just end up slowly bleeding again, right? Because remember, momentum is what keeps these coming up, and I'm hopeful that momentum keeps pushing for Tesla. But if it doesn't, it could make sense to hedge towards the downside. Although you are consolidating right now, so you got to be careful. Q's 41 bips. NVIDIA, what are we sitting at? 1.2. Yeah, I can't really get it going up anymore. All right, Amazon 1%, lost its 200. Palantir ended up going to 4%. Nice, darn. You know, I was watching that one since earlier, but I didn't end up playing it. That's all right. Okay, cool. So let's listen in briefly over here.
Mt. Gox went bankrupt, of course, after a major hack in 2014. So that is hitting the market in a bigger way right now. I like how Zach Pandel from Grayscale framed it the other day when I spoke with him. You think back to how closely we've been watching the Bitcoin halving this year. That was a known positive. supply event. It lowered the amount of Bitcoin supply being produced, and now we have this other source of Bitcoin supply coming in and sort of negating those positive effects of the halving in the short term. And it is not just Mt. Gox. The declines really began last week when the U.S. and German governments sent large amounts of previously seized Bitcoin to exchanges. So, you're seeing Coinbase and MicroStrategy stumbling, and of course, miners across the board are down. And in the past 24 hours, $152 million in long Bitcoin liquidations in the derivatives market. But again, this is just, a short-term move, nothing that fundamentally alters the positive long-term outlook for Bitcoin, which still has quite a lot going for it. And then 57K has been the key support level to watch. That has, of course, now been breached, obviously, and if it hangs here for too long, then 49K would become new support.
In terms of the sort of triggers outside of the liquidation and the selling back from Mt. Gox, have there been other factors that people have been looking at over the course of the last 3 or 4 days?
Yeah, it really is these liquidations. I think some have said that it's been a little bit overplayed, and just because these liquidations are happening, it does not necessarily mean that people are going to be selling this, but we have...
Right, I mean, remember, those liquidations, $9 billion, compared to the market cap, it's like crazy, but some liquidity issues or something there, I guess.
Now, we really have been kind of short of a catalyst. Macro headwinds are always something to watch. We're all looking at the potential Fed rate cuts coming up in September, but then after that, I think, politics is the big conversation, and the outcome of the election in November is the big thing.
Yeah, great stuff. Thanks so much. So to come here on Squawk on the Street, a historic win for Labour in the UK elections. We'll discuss the market implications, plus growing pressure from donors and businesses on President Biden's re-election bid. More on that after this short break.
He's got to go. He's got to step aside.
Third of the migrant kids released into the U.S. can't be reached.
The truth is that the Biden administration doesn't know what has happened to those
Fox Biz is so political.
children. Is that correct?
The fact that a telephone was not picked up, a telephone call was not picked up, does not mean that that child did not have post-release services.
Yet estimates are now that Biden lost contact with twice as many children as Trump.
What percentage of those children's whereabouts?
I have to say, the momentum on Tesla today is somewhat concerning on the 21-day trend. Because usually, you shoot up for like 21 days. That doesn't mean you can't have a red day in between. But, NVIDIA's down today. Bitcoin's down today. So there's some pressure. But the Qs are up like 50 basis points. But some of that declining volume on Tesla is going to be something to watch. Usually when you want that 21-day kind of cycle, volume just sort of grows over time. At least a little deeper into it. We've only really had 3 or 4 days here of increasing volume, trading days. And then it's starting to decrease again already.
That would mean for the image of France abroad, for investors who want to put their money...
Marine Le Pen, we're going to talk about... Nobody wants to talk like American, like stocks. It's either politics. Look, they got a cowboy on over here now. You got Marine Le Pen on Doomberg. And what, a commercial over here. Let's see it. Look, it's Ryan Reynolds. All right, so here's a consolidation on Tesla. Bobbing around, Q's bobbing around. AMD is still holding on to those gains. I saw a trend here early in the day, but did have a little sell-off there for a moment. NVIDIA's trying to still pick a direction here. Enphase, Coin. Let's see what Coin's going to do. Not much. Sitting there at almost 5% down. Tesla's trying a green candle. Coming up to that volume-weighted average price. VWAP line. Ooh, the Palantir run continues. That's where the dollar hollas are today. Dang. And SPY's moving up nicely. All right. Cool. Let's see. Tesla here for a minute. Okay. Palantir, can it hold on? $27. When did it get so expensive? My goodness. Somebody says, have you checked Alphabet yet? No, let's take a look. Goog. Goog's up at 191. Nice. How's Baba? Baba's at 73 bucks. Yeah, it's been sitting in the 73 to 83 range for like ever. Oh. That one's been stuck. I know. I do need to change those colors. You're right. It's so annoying. So, yeah. We can go and do that. So having them be the same color, you're right, is kind of crazy. Let's go move to, I don't know, what color do we want to use? Let's go with like a red. Nice little bright red. That'll help. Thank you for finally motivating me to do it. It's been needed to be done for a long time. It has been done. It has been done, my lord. It has been done. Bitcoin's still rotating down here. You know, you had a little bit of a double top over the last couple hours. Yeah, nice rotation down right now on the BTCs. And Enphase just couldn't get anywhere. Yeah, that was another one that was watched. I mean, right now I'm watching Nvidia. It's consolidating. Obviously, you got to keep an eye on Tesla. It's somewhat rotating down. I'm worried about this. If the momentum goes away on this, which volume just continues to decline, I worry there's going to be some profit taking, and then you get a little bit more red. We'll see. Palantir had a fat green candle that it gave up on already, but still the trend is really nice today on Palantir. Let's see how Salesforce is doing. I don't necessarily want them at the top though. So costs holding on to 36, roughly where it was in pre-market. Amazon's right at 200. Snowflake 17. You've got Supermicro's 850. That's above the 840 line. Yeah, there's Chewy, ChargePoint. McDonald's is actually green today. CRM, nah, it got stuck. 142. Oh, Tesla just had a nice green candle. There you go. So, see if that can hold. Nvidia's trying to go up a little. It's cool. Nvidia. Oh, and Palantir keeps going. That's crazy. And then here are the cues for you. All right, let's listen in over here for a moment.
Case. The likely Chancellor of the Exchequer, the Finance Minister, is Rachel Reeves, which would be the first ever female Chancellor of the Exchequer, and something I did talk to Janet Yellen about actually a few months ago. She was very skillful in saying, I'm not going to get involved in the election, but any senior post in finance and business for women is always something I celebrate. Of course, we've had female prime ministers before, so it's within that context.
What do you expect to see from Rachel Reeves in terms of policy pushes, policy priorities for the UK?
So I think it is worth always reminding that in this election campaign, in order to play it safe, in order to win, and learning from past losses under Jeremy Corbyn, who was further to the left, Keir Starmer and the Labour Party really tacked central and tried not to create any wedges, particularly on tax and spend, where they could with the Conservatives. Slightly more incentives to increase taxes and spend more, but nothing game-changing like you might have expected between Labour and Conservatives.
They spent so much time talking about the UK, and it sounds like most of what they talk about, it seems to be like, oh, it seems pretty moderate. You know, this could happen, but it's all pretty much in the middle. Okay, bro. Okay.
Unwind the Brexit.
And then there's more Marie Le Pen over here. So I'm stuck between the Labour Party, Marie Le Pen, and the border or a commercial. It's okay. All right. So, I mean, this is just a trading range that you're in right now on Tesla here. This, you know, if I zoom out a little bit, I go to the 30-minute, you can see we're kind of topping out over here. So you really want to, you want that momentum to continue, but volume, that first 30-minute candle is pretty dang close to what we had here, but it's certainly not rising anymore. You know, you had a rise of volume as the stock moved up. Now you're starting to see a little bit of a decline in volume. And that second set of 30 minutes, which is up in about 4 minutes, looks like we're going to have about half as much volume as the second set of 30 minutes that we had in the last trading session. Personally, I think that's a little bit bearish for this momentum move because really right now Tesla's moving on momentum. And so you kind of need volume to keep that fuel in the tank. So looking out at the hour chart, I mean, obviously we've had sell-offs before. I'm just wondering its capacity to really push through this 258. You really need, you need volume. And I'm just surprised that you're not getting more volume today. I mean, you know, people get excited. We look at like the Robinhood 24-hour. Problem is that's just such a small representation of the volume that you have. that sometimes it's not a good sole tool as to how the day is going to go the next day. So Palantir, 4.5%. Great day. I wonder if there was news on Palantir. I remember the only news on Nvidia was that you were going to get this, what's it called? Downgrade to neutral from buy. Although I will say their growth numbers, I was impressed. Their growth numbers actually got a nice upgrade from Wall Street consensus growth expectations. So not bad on that POV. So little range bound on Tesla. Google capping out here at about the 191 range. BTC, yeah, no major movements. A lot of sideways movement right now. Yeah, not a lot of severe enthusiasm in either direction. Nvidia, no, just all sideways. Boring. Boring. Let's listen in here.
Democrats are still in panicking mode over Joe Biden, despite the campaign's effort to reassure the party and voters. Well, what did Jones actually say, Kelly?
Yeah, so Ashley, Jones is saying that what you're hearing from Democrats on air versus off air is very different. That the
Palantir's starting to slip a little bit. Now it's only up about 4%. Tesla just turned green on a single candle. We'll see what happens.
Just listen to what he had to say on Wednesday.
Going to be honest, I mean, everybody comes on the air and says all this great stuff, but behind the scenes, it's full-scale panic. People are passing around legal memos, PDFs are flying back and forth on WhatsApp, trying to figure out what are the options, how can you replace Biden, how do you get him to do it in a way where he feels respected. But there is a big conversation happening right now about how this happens, not whether.
I think that's a really interesting way to phrase it, Ashley.
Yeah.
How, not whether. And I think for Van Jones to reveal that, I mean, he's been a staunch supporter of the president. That tells you how deep this panic runs. He also shared that the conversation he's privy to doesn't really leave the final decision up to President Biden. And he signaled, as many others have been, that VP Harris would be a good choice.
Very interesting stuff. The intrigue, and it seems to build with each passing day. But let's get back to the markets, Kelly. You've been looking at some of the other movers today. Let's begin with a biggie, Microsoft.
Yeah, so it's up 1%, right? All big tech is doing well today. Microsoft is laying off a slew of folks earlier this week. That news is just coming out now. So the company hasn't confirmed how many, but if you do a quick scan of LinkedIn, according to GeekWire, it looks like it's primarily in product and program management roles. I mean, remember, this comes after Microsoft, they cut over 2,000 jobs in gaming earlier this year, another 1,000 in various other teams last month. Actually, though, I mean, we're halfway through the year. This does tend to happen, especially with tech companies and especially ahead of earnings season. Companies like to signal to investors they're trimming the fat where they can because, of course, Microsoft.
I would hate to be one of those employees that got laid off and then tune into Fox Business because now I'm unemployed and then hear them talking about, yeah, they trimmed the fat. Oh.
It looks like investors are listening to JP Morgan. The stock's almost up 1%. So let's just rewind to Wednesday. Constellation, they posted a top and bottom line beat for the second quarter, but the stock dropped because investors were worried about the health of their beer and wine business. But according to JP Morgan, that sell-off was unjustified. They noted that the recent pullback could present a buying opportunity, especially thanks to stronger beer sales, a push to focus on more premium offerings and a growing Hispanic population that is coming of age, right? I mean, this brand is home to fan favorites Modelo, Corona. I'm sure a lot of folks were drinking that yesterday, and sounds like investors are looking at JP Morgan. Stock's up 1%. Yeah, and last one for you, Ashley. I just want to quickly touch on NIO. So Stephen Wei-Feng, he stepped down as CFO effective immediately, citing personal reasons. That's
actually talking about business now.
8.5%. Now, Feng would be succeeded by an insider, Stanley Chu, who's been at the company since October 2016. But the reality is the new CFO is going to have to steer this company through troubled waters. The EU just confirmed their decision to hike tariffs on EVs imported from China. That means NIO may have to raise prices, and that is not what you want to hear in the EV price war, Ashley.
Yeah, I know.
No, you don't. The stock down 8.5%. Kelly, thank you very much. Peter Marisi joins us now. Great to have you here, Peter. I want to talk about the jobs report. Of course, it's Jobs Friday. It came in higher than expected, but of course, you look at the unemployment rate, that ticked up to 4.1%. That can't be great for Joe Biden. I mean, what was your take
He
on
says, I'm one of those employees, but I stubbed my toe, tripped, and fell uphill into a better job. Wow. Okay, well, congratulations. Happy you were able to pull off a better job. That's great. Congratulations. That's not everybody's going to be that in that position, so I'm happy for you. Good for you. That's always the goal, right? Always the goal is always how can you think about going what's next? You know, what's next? What's next? What's next? Just listen in.
It's good for inflation, but the economy is doing what it's supposed to do, and that is slow down after a period of such heated jobs growth.
I want to get to this one. It's the new cover of The Economist. It's titled "No Way to Run a Country." It has the presidential seal slapped on the front of a walker.
They went viral with this walker, like they really did, and they are so anti-Trump too. It's crazy.
To drop out. Your thoughts?
Well, I do think it's time for Joe Biden to take a graceful exit. I didn't like the cover when I saw it, when I received it in my email. I thought it was in bad taste, especially from that was published by a foreign magazine of what is supposed to be a friend and ally. My feeling is we should always have respect for the president and the prime minister. And
I mean, I think it gets a lot of attention to the issue and kind of helps push Biden out.
But amount of respect and compassion for the president right now. This is a very difficult period in his life.
Yeah, it's difficult, and I got to tell you, it's hard to watch, quite frankly. He's 81, he's struggling. We all identify with that, but I think what's more at play here, Peter, is the fact that they knew on the inner circle about his decline, but continued to lie to the American public.
I think this White House has been cynical and condescending to the American people, and certainly to people that disagree with them all along. The compassion that I have for Joe Biden is the compassion I have for a man that I greatly respected, even though I disagreed with him on many political issues. I can't say that I share that same respect for some members of his, for example, his economic team. You know, interacting with one of them in particular that's prominent, I was always made to feel that I was sort of a lower life form and morally inferior, simply because I had conservative values. And I do believe that pervades inside that place. And people like that then become self-justified to do whatever it takes. It almost becomes a criminal mentality.
Yeah, no, I hear you. Peter, we're out of time.
This is a conspiracy.
As always, I know, right? Peter, thank you so much for joining us today. We do appreciate it, as always. Edward Lawrence joins us.
Oh, man. Okay. Oh, that's it's a conspiracy. I know. All right. It's probably time to push the button, but let's take another brief look here. So you've got a consolidation still on Tesla. I think just so you could see it a little bit more clearly, I'll throw in a couple lines. You know, you could probably throw one right about here. Let's go just make that like a dark purple line, a little lighter so you can actually see it. And another right about here. This, just ballpark guide rails here of a consolidation. So if you're trading this one, you're really hoping, for calls, you're really hoping to break up above the 248 level. For puts, you're really looking for a break under 245, and then some kind of push for a trend, because right now you're in consolidation, which is a tough place to be, unless, of course, you're holding something that you're holding into next week. But on a day trade, consolidations are always rough. AMD's giving up a little bit. You had another little leg up there on Palantir after a little bit of a sell down, although now you're getting a red candle as well. Nvidia's, also somewhat in that consolidation range. You've got Bitcoin, 55.4, the Q's rotating down, Coinbase, down 5.2 right now. That's a chunk right there. Taking a peek at, let's see here, Salesforce, also now sideways, Amazon now sideways, Robinhood. Today, and I don't want to be, the bear or whatever, but today just feels like the kind of day that would sell off into the close. It is a full trading day, so it's not like a half day like what we had. But, you are, certainly setting up for what feels like some red into the close. I don't know if we get a rally into the end here. The Q's really topped out. Look at where they topped out, though. 494. I mean, it's pretty impressive. You're almost at $500 on the Q's. To think in, in 22 we were in the 3s. It's pretty wild seeing that recovery. That Nike swoosh has really held on. Trying to, look at that. Trying to push the top of that box there on Tesla. See if you can break out of that. And Palantir's red candle finally coming to a pause. AMD as well. Yeah, bullish on a lot of positions. A lot of positions just moving up. What's moving down? JP Morgan's moving up. Open Doors, barcoding. Trade Desk. I mean, that's a giant consolidation too. And Autodesk. Hut 8. Supermicro. Ooh, Supermicro just lost 840. That's a big trading line. I'd be watchful of this one. Somebody says Tesla is about 38% above the 100-day moving average. Yeah, that'll happen in a breakout. Yeah, there you go. It's trying to come out. Let's go to the day. Yeah, the 100-day is at 180, and then the 200's at 205. But that's what happens when you break out of a 2.5-year downtrend. Actually got a lot of optimism in Tesla. There is an expectation that one of these days you end up having a red day. Who knows when that is. But I'm looking at, my thinking is you got to break 258. If you break 258, you're going to go to 295. That's my thesis. Today's decline in volume is not great. I don't love that. And I think it could end up turning bearish for it, given just the behavior we've seen so far. And that second 30-minute candlestick is half the volume we previously had. And you really, to keep that momentum going, you really got to have volume for the upside, in my opinion. But we shall see. End phase. A lot of people I know they're talking about, or wondering, is it time to go long end phase? It's under 100 again. Don't know. We shall see. All right, let's take a listen at it over here.
Certainly, as it draws closer,
and then I gotta get more coffee soon.
More important for markets and for investors. I'd say at the moment, a lot of the market.
Ooh, Tesla's trying to push through that box.
The discussion is still about soft landing versus sharper downturn, inflation, Fed cuts, but I would expect that to change as we get past the summer and into the fall and really into the hot phase of the campaign.
Yeah, and finally, you're expecting what, one cut this year, or are you at two?
We have two cuts. We have a cut in September and we have a cut in December. So basically a quarterly pace similar to what we have seen with other central banks. The European Central Bank very likely to cut again in September, and we're seeing that probably in Canada as well. And I think this is the sort of soft landing cutting pace that we are seeing in the G10 economies.
Jan, thank you. Enjoy the weekend.
Thank you.
Staying with jobs, our Kate Rogers is looking at one sector continuing to experience a tight labor market. Hey, Kate.
Hey, Leslie, good morning. The need for workers in the chip sector, from technicians to engineers and more, is being felt across the industry, with a recent study from the Semiconductor Industry Association projecting a current shortage of 67,000 workers in the sector and a broader gap of 1.4 million in the U.S. economy by 2030. Now, Global Foundries is maker of essential chips for everyday products from phones to appliances and supplier to big companies, including GM. It's actively recruiting for hundreds of roles across the globe. Morgan Woods started out as a chips technician in Malta, New York, and today is a training and development analyst overseeing other technicians.
As the demand for the microchips increases, we definitely need more manpower to help support the constant rollout of microchips and meeting our daily targets.
Now, to help fill its talent pipeline at its facilities in New York and Vermont, the company launched an apprenticeship program that requires only a high school degree and an interest in hands-on work, as well as a willingness to learn new skills.
If you're not getting traditional talent, cross-training, talent, identifying alternate talent pools, people who are doing in different fields.
Yeah, think about that. Worker shortage in the semis. It somewhat makes sense. But we'll see how long they keep expanding.
Opportunities that exist within the semiconductor industry is our approach.
Global Foundries announced in March $1.5 billion in planned funding from the CHIPS Act. This, combined with state-level funding, is expected to create over 1,500 manufacturing jobs and about 9.
All right, I'm going to push the button. Gosh, AMD went up over 4%. Nice. AMD was the play. All right, let's go ahead and push the button. Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker. Here you go. Thank you so much for being here. We'll see y'all on next.